please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, our colleague Priya Sheth caught up with Economic Affairs Secretary S.C. Garg, and this comes after the government reiterated its pitch for a ratings upgrade to Fitch. Garg told Priya that they had a good meeting with the rating agency and added that they had a good assessment of the developments in the country. That's not all. Garg also confirmed that the government will table the Fugitive Economic Offenders Bill on the floor of the Parliament in the budget session itself.
It was a good meeting, very nice meeting. They had a good assessment of what the country is doing, how its prospects lies, how its future. They had some questions on fiscal deficit and other things, and we answered them very well, convinced them that this is a real fiscal consolidation which is taking place. Let's wait how they assess and bring their ratings.
Is there a next meeting planned as well with the Fitch representatives?
No, not to the Government of India. Of course, they are meeting with every other policy maker, and they're meeting with the Reserve Bank and other people also. So that's what they do. They also meet. So that's going on, but not with the Government of India.
In terms of the Fugitive Economic Offenders Bill, when will that be introduced, sir?
Very soon.
How soon will that be, sir?
Within this session, next couple of days.
All right, that was a visibly pleased DEA. Let's move on. We have a CNBC TV18 exclusive now. Ultratech has raised its bid for Binani. Nisha Poddar is here with the exclusive details. Nisha, good morning.
Good morning, Mangalam. So, yes, sources with direct knowledge have shared with us that the fight for Binani Cement has really intensified. Ultratech yesterday in the NCLT court in Kolkata has notified that they are going to up their bid for Binani Cement by a whopping 700 odd crore rupees. Now, 7,300 odd crore rupees will be the total bid size, which includes working capital and capex as well, apart from paying off the lenders. Now, this will put a lot of pressure on Dalmia Bharat because the Committee of Creditors and the RP for Binani Cement had awarded Binani Cement to Dalmia Bharat. Now remember that the entire issue occurred and Ultratech had challenged COC's decision to really call Dalmia Bharat as the winner for Binani Cement because both their bids, Ultratech as well as Dalmia Bharat, was extremely close to each other. So Ultratech was questioning this particular decision. That matter is in NCLT and the bids have been raised for the company.
Nisha, thanks a lot for that. In fact, this morning we got a note from CLSA as well that they said that on the increased bid, on the face of it, it appears that Binani assets are exorbitantly valued, but the calculation suggests that Ultratech's bid could still be. Let's talk about the primary market action now. HG Infra will be the one that will list on the bourses today. Anisha, a positive listing is what we're expecting?
Well, yes, the grey market premium suggests that the listing might happen at the range of around 320-330 rupees per share. The market cues are also positive, so that should be supportive. Remember, the issue price was around 260 to 270 rupees, and the subscription saw good interest because it was subscribed 5 times, and the anchor investors also included marquee names like DSP, BlackRock, SBI Equity, HDFC, etc. Now, the company is looking to raise around 460 odd crores, out of which 300 crores is the fresh issue and around 60 crores is what the offer for sale is. The net proceeds of the fresh issue will be utilized for purchasing capital equipment, repayment of debt as well as general corporate purposes. Now, the company essentially is an EPC player and they usually carry out the fixed sum turnkey basis. They are mostly present in the road and highways part of the business, and the order book is held at around 3,700 odd crores given their revenue size. Now, talking about the financials, over the last 3-4 years, they have shown accelerated growth because the revenue in the last 4 years grew by around 31% CAGR, and even the profit growth was at the CAGR of around 38-39%. In the first half of this year, they have performed all right because the revenue is at around 567 odd crores. This compares to around 1,055 crore that did in the entire of last year. So the run rate is pretty much seen on a similar level. So the profit has shown a bit of growth because the profit figure in the first half of the year was 29 crore versus 49 crore that they reported in the entire of last year. Now, the business does not come without any risk. for them, it is a lot concentrated business, because though they are present in around 7 states, but most of the business, around 80-85% of it, comes from Rajasthan and Gujarat. Now they say that they are very strong in those regions and they're looking to expand, but nonetheless that remains a bit of concentration risk. And also remember, the company has scaled up tremendously in the last 3-4 years, so there's a bit of limited track record, and even the base was small, so the CAGR numbers look very, very healthy. Other than that, if you look at the valuations, now that is something which is working for the company, because at the level of 270, it was expected to be around 33 times the post-issue equity base, which is still at a discount than what we have seen for other EPC players and road companies, given the run-up that we have seen in the infrastructure companies. So the valuations remain a bit supportive, and that is the reason we are expecting that the listing might be a bit positive. However, there are a bit of constraints. Let's see if they work on the mind of investors.
All right, we'll keep an eye out on that, but also watch out for the flashes that are coming on the screen. AFP releases a statement coming in from China which says,
well, the government has sought Parliament's nod to spend an additional 85,000 crore rupees in the current fiscal. Of this, around 70% or 59,000 odd crore rupees is earmarked to compensate states for the revenue loss on account of the GST rollout. Another major spending head is over 15,000 crore rupees towards grants and aid and creation of capital assets under various schemes.
all right, but while the spending has increased, so has the government's revenue collection. Direct tax collection until February of FY18 has risen nearly 20%. This means that the government actually mopped up 7.44 lakh crore rupees in the current fiscal so far, and this versus revised estimates of 10.5 lakh crore rupees for FY18. Corporate income tax collection too has grown about 19.7%, and personal income tax, that one's grown by about 18.6%.
Okay, let's shift focus to the world of commodities now, and Manisha Gupta joins us with all the update from that space. Manisha, good morning. There are just statements coming from agencies quoting China that the US tariffs are a serious attack on the global trade system. Are we seeing any impact in the world of commodity as well?
We sure are, yes. This is what the commodities as an asset class has been following for some time now. And even as the U.S. has pressed ahead with import tariff on steel and aluminum, the one positive that we saw yesterday was that 11 nations have signed an Asia-Pacific Trade Pact. Remember, U.S. had withdrawn from this as soon as the U.S. President Trump took over. So the world clearly seems divided as we work in it right now. But yes, you have seen pressure in many of the commodities, especially the metal prices, where nickel prices fell 2.5% overnight. Zinc is trading the lowest in last 3 months. It also has to do with the China import data, where you have seen the copper imports decline 20% month-on-month basis. But the only positive has been the Chinese export numbers, which have surged month-on-month basis, and that tells you that the economy is still resilient. So some support that you could see in metals clearly could be coming in from there. One quick word on the crude oil prices, and while we have seen some strength on that, as NAFTA countries have been exempted by the U.S. and the global equity markets have seen some support, but even with that, the crude oil prices are headed for a second weekly decline, and we are trading very close to those 3-week lows. So overall, yes, we have seen a jittery week continue for commodities.
All right, jittery week continue for commodities. Let's take a look at the cues coming in from the F&O space as well. Now, yesterday, remember, was the Nifty Bank weekly options expiry, and we saw a sharp short covering pop, and it was the second highest F&O turnover ever, with about 16.5, closer to that 17 lakh crore rupees worth shares traded or volumes traded on the F&O exchange. The index futures and index options saw some purchase by the FIIs, about 325 crores worth purchase in index futures. Index options saw a purchase of 540 crores, where we saw unwinding of positions in short calls as well as some unwinding in long calls as well. That, however, would be muddled by the fact that there was Nifty Bank weekly options expiry, so difficult to say how much was on the Nifty, how much on the Nifty Bank. But FII long exposure still below that 50% mark, so that is something we'll watch out for. And while the markets did move higher, the premium on the Nifty futures did come down to about just 0.3%, so that is something we will definitely watch out for. A couple of options that were pretty active in trade yesterday. 10,000 put, that one added close to 10 lakh shares, 11 lakh shares in open interest, indicating that yes, 10,000 put could be a bit of a support, the 10,000 mark. 10,100 put too saw some writing, and the 10,600 call writers, they felt a little jittery after the short covering pop that we saw, unwound some positions to the tune of 12.9 lakh crores. The stocks that moved yesterday and took the Bank Nifty higher, SBI, ICICI Bank, as well as another couple of high beta names, all of them which moved higher saw their open interest come off, indicating that yes, indeed, there was short covering.
Okay, thank you, Mangalam, for that. Important data coming from the F&O space there. But with that, it is a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants this week.
Our first call is a buy call on Union Bank for a target of 108, stop loss 93.2. Second buy would be on Dilip Buildcon for a target of 1090, stop loss 979. Third buy would be on Bank of Baroda for a target of 144, stop loss 128. And final call would be a buy call on Balrampur Chini for a target of 101, stop loss 83.9.
First stock for today on the buy side is going to be Castrol India, and long positions can be created here, keeping a stop loss of 196.90 and expecting a target of 218. Next stock on the buy side is going to be Trent Limited, and long positions can be created in Trent Limited, keeping a stop loss of 324 for the target of 358. Another stock on the buy side is going to be Mestec, and stop loss for Mestec has to be maintained at 499 for the target of 551. And the final stock is on the short side is BEML, and stop loss for BEML has to be maintained at 1167, expecting a target of 1048.
My first stock call for the day will be a buy on Federal Bank, which can be bought with a stop loss at 92 for a target of 97. My second stock call will be a buy on Tata Chemicals with a stop loss at 679 for a target of 695. My third stock call will be a buy on SRF, which can be picked up with a stop loss at 1825 and a target of 1885. My fourth and final stock call for the day will be a buy on TVS Motors, which can be bought with a stop loss at 630 for a target of 655.